Hello and welcome to the week ahead from the Financial Times in London. Here's what we'll be watching in the coming days. G7 finance ministers and central bank governors meet in Japan. Burberry issues full-year results as its chief executive Christopher Bailey struggles to boost sales. And the US releases its latest inflation data and minutes from the last Fed meeting. But first to Japan, where finance ministers and central bank governors from the G7 nations will meet this week. And with a weak world economy, sluggish productivity growth, fresh wobbles in Greece and uncertainties over Brexit, the FT's Tokyo Bureau Chief Robin Harding says the world's top economic officials will have plenty to talk about.
One is currencies, where I expect a repeat of the message from Shanghai. That is, big currency swings are undesirable, but intervention is against the rules. Second is fiscal stimulus, where I expect the gathered G7 finance ministers to try and agree on the line that their leaders will take at a summit later in the month. Japanese Prime Minister Shinzo Abe is keen on fiscal stimulus. How far he can go on that, the leaders will debate.
But with the G20 now the main forum for managing the global economy, the ministers are unlikely to agree any big policy shifts. Instead, the meeting could be used to discuss subjects where the interests of the rich G7 group differ from the rest of the G20. And now to Burberry, which issues full-year results on Wednesday. The pressure is on Christopher Bailey, who took over as chief executive in May 2014. The company is battling with falling revenues and a fall in share price, as the FT's Paul McLean explains.
Burberry's really struggled in the last 12 months. Shares are down about 34%. This is partially as a result of China. About 40% of its consumers are Chinese, and it's been hit by a real slowdown in sales in China. In Japan as well, it's also underexposed, and Japan's an area where its competitors have overperformed in recent weeks and months, so that's why it's been hit so badly in the last 12 months.
Focus will also be on the results of a business review from Burberry, with speculation over the appointment of a senior manager to support Mr. Bailey. It's not yet clear whether this new position would be at boardroom level, but such a move is likely to be welcomed by investors, some of whom have been critical of the leadership at the company. Some investors have also questioned Burberry's chairman, Sir John Peace, for appointing Mr. Bailey to the dual role of creative head and chief executive after the departure of Angela Arendt to Apple. And finally, to the United States, where on Tuesday, Federal Reserve watchers will be scrutinising the latest US inflation data. The figures could influence the Fed's decision as to whether to raise interest rates at its next meeting in June. The chances of a rate rise next month have been hit by a ream of poor recent economic data, but analysts think inflation improved during April. The consumer price index rate is expected to move up to 1.1% year-on-year from 0.9% in March, driven by energy price rises. Core inflation, which strips out the effect of energy and food prices, has been running at close to the 2% target. For April, it's expected to remain at 2.2% year-on-year. If the data show any significant increase, a June rate rise could become a possibility. Here's what our US economics editor Sam Fleming had to say.
Firstly, on inflation, this has been a little bit soft recently, especially the March figures, which we saw slightly weaker than in the January and February numbers. Janet Yellen, the Fed chair, has always said in March, that she expected the initial strength in inflation might prove a little fleeting, and we're seeing that pan out in the inflation numbers that we had to date. So the April numbers, which we get on Tuesday for the consumer price index, will be quite important. We'll be looking at those to see whether this slight slowdown we saw in March has continued into April. If so, that will be of a little bit of concern to policymakers who want to see a firmness in inflation in order to justify a second move in interest rates this year.
As well as inflation numbers, Fed minutes are also out this week, perhaps providing further clues as to whether the central bank will move on rates. Analysts will be looking at what policymakers discussed about international risks and US data, which showed slower economic growth. And that's what the week ahead looks like from the Financial Times in London. See you again next time.